Welcome everybody today to this new experience with us, and with it we appreciate your time and jumping in during your lunch break, and we will make sure that we get it covered quick. You'll have a little time for question and answer, and then we'll get you out by 12:30. So with that in mind, my name is Ryan Wiedemann, and I come together. I've been in the business 18 years myself, alongside my dad for 14, and then we've got my dad that'll be with us today, and he's been in for over 40 years. So we've got a lot of experience to bring to you. Today we're starting this new bi-weekly webinar and kicking it off. We're bringing in David Paul, who's with Gershman Mortgage, kind of some of his background. He's been in the business here in Sedalia for 14 years. He's got a bachelor's in science and finance from Missouri State University, and it's kind of one of his claims to fame. This past year, he was the top VA lender for Gershman Mortgage, which is a 10-state regional business. So, jumping into the webinar itself, why we wanted to do this, we feel like we're working with people that are making their biggest investment in their life, and so we're in times of uncertainty, and our thought was give you something to let you know what's changing as this time's going on, and also just a goal of keeping you up to breast with some of the other partners in our industry. Today, what we'll be looking at, we've got 3 segments here. The first one will be my dad jumping in, giving us a feel of what real estate's looking like today, and he's going to give some feel on what we've found out through some of our webinars, some changes that have been going on, and then he's going to give you the lowdown on some of our local statistics. Then we'll pass the mic over to David, who's going to give the insights of hour-by-hour changes as the lending market goes, and just giving a little bit of feel of what the home buying process through their eyes are. So what the final section, we're going to give the mic to the public and let you guys bounce questions off. It may be specific, it may be general, and we really want this to be around you all and giving you a chance to get a feel of what's going on out there and your burning questions. So what I'm going to suggest when we start with my dad, I'm going to put everything on mute. If you've got questions you think of, jot them down and put them in the chat room. If you're not comfortable, to bring them up at the end. And if you would choose my name on there, that'll be a private question to me, and then we can pass them out in the question and answer time. And then when we're taking questions, if it looks like something that's going to be an extended answer, or we don't quite know the answer right now, we'll request the same thing, have you go through my chat room, get a few details, and David or ourselves will get back with you. So, no further ado, we want to get this turned over to my dad, who is going to give you a feel on real estate today.
Thank you, Ryan. I want to take just a couple of minutes to give a brief answer to the questions we most commonly are asked these days. They are, how is the real estate market? And how has the pandemic affected the market? And what do you expect the remainder of the year? First, how is the market in Pettis County? My simple answer would be solid. 1 year ago, on April 15, there were 234 residential homes offered for sale in Pettis County, according to the West Central Association of Realtors, MLS. with 74 of those homes on contract, leaving 160 homes available for buyers. This year on April 13, there were 216 homes offered with 66 homes on contract, leaving 150 homes available. No significant change. It is still a seller's market. The next question, how has the pandemic affected the market, is a little more difficult to answer because most of the transactions being closed now were on contract before the stay-at-home order was issued. A quick check of the MLS statistics shows that through March of this year, 106 residential homes had been sold, and last year, 110 had sold. That would say, at this time, there's no significant change. That may change some in the upcoming months. Stay tuned to our webinars for updates. The area where there have been some significant changes in our business during the stay-at-home order is how we communicate with you and promote our homes that are for sale. We've been integrating many more video features into our marketing, adding more internet streaming items such as this webinar to our marketing program. We have been continuously studying webinars and courses to up our game so that we may provide great service to our clients and the public. Lastly, what do I see in the real estate market for the remainder of the year? Let me preface this by saying I am an eternal optimist. I have been looking at many sources and believe that we're going to have a great year with about a 3-month blip in it. I am putting up a slide that illustrates what many of the major forecasters are saying. We will probably have a V or a checkmark recovery from a brief recession. A final comment from one of the forecasters is the comment, a recession does not equate a housing crisis. At this time, it is my pleasure to turn the program over to David Paul, who is going to discuss what is happening in the real estate residential lending world. David, it's all yours.
Thank you. Yeah, again, my name's David Paul with Gershman Mortgage here out of Sedalia. And one of the main things is we are doing loans. We do conventional, VA, FHA, and USDA. What's happened in the loan area is mainly what happened is the rules have gotten a little bit tighter on what our things are. We need higher credit scores and lower debt to income ratios in general. What I'd highly recommend people do is get pre-approvals now more than ever before. So even if you've had a pre-approval 45 days ago, you probably need to update and make sure you're still pre-approved, because our rules are changing on a daily basis and we don't know what they are till we run the systems. So kind of once I lock your rate, I also lock the rules. So they can't change the rules once I lock your rate. That is one of the biggest things I would tell people. And then getting pre-approved, what that does is if your credit scores are too low, I can help you and tell you what to do to get them higher, because it does make a bigger difference on payments over the years. Then one more thing on our closings, we have to do a lot more verifications of employment now than we used to. So 48 hours before we close, we must prove that you're not laid off and that you're not going to be laid off in the next 2 weeks. So if that is going to happen, we wouldn't be able to close. So we need to get a good feel of what is going to happen, which right now is hard to do. But I actually do believe that the rules are going to be getting easier as we go along and dropping back like they were before. Does anybody have any questions on anything?
David, I've got one that you used a term that necessary to lock a loan. What is necessary in your world to, quote, lock a loan?
In general, on locking a loan, we lock your rate and everything on a loan. When you give me a copy of the signed contract, I can lock your rate and lock the loan. And when we lock your rate, we're also locking in the rules of at that time. So if somebody changes something, they can't change the rules on us once I lock your rate. But I must have an actual contract before I can lock a rate.
Thank you. Let me just ask another quick one. What is there something a person can do, since we are looking at credit scores? Well, I'll just use the example of maybe needing a 680 and we used to need a 640 or something like that. What can a person do to maybe quickly improve their credit? Could you comment on that?
One of the main things I would tell you is don't try to do it on your own, because most people, it's an exact science. We actually have programs that we can run through and say, hey, if you pay this down to 30%, you know, when you have a credit card, you have a limit, say you have $1,000 limit. If you have your balance down at $300 instead of $1,000, your credit scores will be going up. Your credit scores tend to go down when you go over 50% of your balance that you could do. So that is one quick way to do it. The other is sometimes is making sure that you make 12 payments on things rather than, I have a lot of people that will pay off things in 9 months. It really doesn't help your credit score. It's that 12th payment that really makes a big difference on raising your credit score, and the history of how long you've had a credit card or car payment, those sorts of things. But there's a big thing to do with the balance of what you initially could get in a loan and what you currently owe. So the more you pay things down, the higher your credit scores go.
David, in discussion before we started today, you mentioned something about forbearance, which is a new term that has come out. Could you comment on that a little and how that might affect somebody who wanted to buy a home?
Right. Forbearance, it was set up so people could skip house payments. The problem with forbearance is to qualify to buy a house, you have to be current on your current mortgage for the last 12 months. I do not think so if you go into a forbearance, I don't think you're going to qualify for a new home until you are current for 12 months. That system was set up to help people from losing their homes, which is a good idea that what they did, but they didn't put any rules on it. And that is what the problem is.
Thank you, David.
Anybody else out there?
Well, thank you. If you have any other questions, you can either email Ryan or myself, and we'd be happy to answer them again later.
And with that in mind, we go ahead and wrap up our session for this afternoon. And if we got our contact information, and David's on the screen, if you run into questions along the way, certainly get in touch with either of us. As mentioned, touch base with the professionals right now, because things are constantly changing. With it, we're excited to announce that we're going to be continuing this bi-weekly session on Thursday afternoons at noon. Our next one will be the 14th of May, and that's going to be Todd Lewis with Truman Title, and he's going to come in here and cover some topics on some current issues that they're facing in the title industry. So mark that down. And with it, we also remind you we will be getting current numbers as far as closings go, with having taken place during the virus. So if you want to see how the market is starting to look with trending closings, definitely tune in. So with it, thank you again for your time, and everybody have an excellent afternoon.